FY25 earnings conference call. As a reminder, all the participants' line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Hazel Rathod. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone. Thank you for joining us for Bikaji Foods International Q1FY25 earnings conference call. From the management, we have with us Mr. Rishabh Jain, CFO, and Mr. Manoj Verma, COO. I now request Mr. Rishabh Jain to take us through the key opening remarks, after which we can open the floor for the question and answer session. Thank you, and over to you, sir.
Thank you very much, and thank you to all the investors who joined the call. So, from Bikaji perspective, I have with me Mr. Manoj Verma, who is the CEO of the company, Pratik Sharma. So this quarter has been very strong quarter performance from Bikaji lens. So we have done close to 18.7% revenue from operation growth compared to last quarter, June quarter. There is also PLI income which has been added in other operating income. So without PLI also we have grown at close to 15.6%. So overall revenue growth is at 15.6% if we exclude PLI impact, but overall it's close to 18.7% revenue from operation growth. The main part is our volume growth is very in ethnic snacks or salty snacks category. So it's close to 18.5%. And when we see traditional snacks, it's close to 16%. When you see Western snacks, it's 26%. So overall underlying volume growth is as per our target, it's close to 18.5%. And from EBITDA lens, overall the company delivered close to 9.2% growth over last year quarter, and we delivered 91.6 crore rupees from EBITDA lens. Overall EBITDA is close to 16%, and there is also PLI income which has been added. So without PLI also the EBITDA is close to 13.7%. So if you exclude PLI income, the EBITDA is 13.7%. From gross margin lens also, so we are seeing little commodity inflation in key pulses, be it chana, be it few pulses, be it dry fruits like kaju or potato price. But yeah, overall we have maintained the same gross margin level largely compared to when we see last quarter. Our overall gross margin is at 32.2%. When we exclude a PLI impact, but yeah, so that's the target what we're taken on, that we'll not, our target is to be at least 32% gross margin, and we are about it as of now, despite we're seeing some price uptake in commodity prices. Gross margin, so that's overall from manufacturing facility length. So we completed our capex commitment in March quarter. When March quarter overall we committed close to 440 crore rupees in capex, and then we made a plan 2.5-3 years back, and we completed all the capex commitment. We have made a big capacity across all part of India in all core markets as well as focus markets. So in core markets like Assam and Bihar, we have set a plan in last 2 years. In focus market also like UP, Raipur, and South also we have set up big facilities to fuel the growth for coming years. So we have built a great capacity in each category, be it namkeens, be it Western snacks, be it bhujia. So across category we have good capacity. Currently we have around 45-46% utilization at overall level. Next quarter is a festivity season where we'll see a uptick of demand in sweet category, gifting category. So we'll utilize more in that sense. But yeah, overall, looking at current sense, overall we are at good level, and in coming 3 to 4 years, we'll target this to take this to close to 70%. That's the target what we are taking on. From capex lens, so we completed more of the capex. So coming years there will be minimal capex. That will be just NPDs or regular maintenance capex. We will not see any major capex in coming years. From distribution lens, so
talking about distribution, as we committed and as one of the growth driver company has identified, the year's plan, what we have is to add about 50,000 outlets, of which over 20,000 outlets in our direct reach got covered now in this quarter itself. So that's well on track. Overall, if we talk about now in terms of category, so what we have heard and what we have witnessed is that now last year there were a couple of quarters where we felt that rural was on a slowdown, which good part was that it started picking up, and the quarter one, if we look at, has continued in that sense. So we see quite a recovery in the rural sector as well. With the kind of budget which has come in and the money getting infused in rural and in job creation opportunities, we strongly believe that this momentum should continue. On top of it, the expectation on monsoons will also be one of the enabler or the driver of this continued rural and overall growth. So that's what we believe. We have delivered, Rishabh has just spoken about the kind of volume growth. What we have delivered is ahead of our plans, what we had planned for the year. We hope that we'll continue this momentum and should be on track to deliver the full year numbers what we talk about. Within the categories we look at, so this category has grown in this quarter one year on year, high single digit number in terms of value, of which the higher growth has come from the Western snacks for the category. And within, if I put a split between rural and urban, so in urban, it is traditional, which has grown faster, in rural, which is Western, which has grown faster. So that's the dynamics, what we witness and what we see, which is coming through. Our growths are now replicating. In fact, we've grown ahead of the category. That's the category growth. Numbers if we speak about, so our volume growth overall is about 16%. Revenue growth 18.7, which includes PLI. Without PLI, if we talk, it's 15.6%. Interesting thing is that ethnic snacks or say traditional snacks, so to say, is a 16% growth, and the Western snacks has grown at 26% growth over last year's quarter one. Packet sweets has grown at 12.3%. Papad, though a small category, yet grown at 14%. So the interesting point here is that across categories, if we look at, it's a double digit or a high double digit growth which we as company has witnessed in this quarter. We look our market, we look our business in three parts, like which is core, focus, and other states. So core has grown at 14.3%. Focus states has grown at 16%, and other states has grown, though it's a small base, but grown at 24%. Exports growth is little subdued, which is at 6.7%, but that again is a little seasonality and some impact of frozen stuff is there. So that's the growth which exports has witnessed. Another point is that in this quarter, if we look at, and I'm sure all of you would have heard and read that there was a heat wave, and for about 30 plus days was very, very bad for industry, which was from the consumption lens. So that impacted us as well. But what held us back was the family pack. So our family pack grew at 17.3%, and impulse was relatively low. So point is that the momentum on the family pack continues, and that's the growth what we have delivered. And hence, coming on to our contribution of family pack stays at 56.7, and the impulse is 42.8 to our overall business.
So overall numbers plan, so largely we delivered volume growth of 16%. Our traditional snacks largely has delivered a greater growth than Western snacks. Overall from margin lens also, so we have seen little uptick in prices in like persistent flow like chana prices, potato prices have seen a good commodity inflation, and we also seen the same inflation in first quarter and second quarter also. We are looking at same inflation type of inflation, hearing the same noise, and what we're getting reports from our vendors that we are seeing good increase in dry fruit prices, which is the key in Diwali season. So this quarter also we are seeing good impact on our overall gross margin. So but overall we are working towards the same, that it will not go beyond the same target what we taken from gross margin line. So from that lens, thank you very much, and we are happy to answer all the questions you have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Percy from IIFL. Please go ahead.
This quarter, but for a few quarters, the other states are actually growing faster than the focus states. So these are the states where actually we are not putting too much of attention and resources.
So sorry to interrupt, sir. So can you please repeat your question?
The entire thing?
Yes, sir.
Okay. So my question is that if you look at the geographic mix in terms of the focus states, the growth is faster than the core states. However, not by a very large amount. Given that our market shares in the focus states are very low, I think there's an expectation that maybe our growth rates there should be like 25-30%. Related question here is that the others portion of the geographic mix, where we are not putting in much of resources and bandwidth, there we are seeing actually growth of a higher order. So why is that happening? If you can just address these two related questions, and then I'll have one more question. Thanks.
Yeah, thanks for the question. So one is that when we say other states, so it doesn't mean that they are ignored states. That's just the nomenclature. So we do everything there also, but yes, of a different level. To your question, let me answer. So if we look at it, it's about just 30% of the other state sales comes from general trade, and the rest is modern trade and institutions, which is what is doing well at a pan-India level. And that's where we see that these growth. So with our growth, disproportionate growth in the modern trade channel and e-com channel, these states are doing much, much higher. If I look at just the contribution of general trade, where we put feet on ground and all that stuff, so the contribution of these states is very, very little, and that is why this number looks little high.
Right. So what I wanted to understand, sir, is that our strategy was that in the focus states, we are going to invest materially in terms of sales and distribution infrastructure. And that would be, of course, in general trade in addition to modern trade and e-commerce. And now that strategy has been articulated more than 2 to 3 years ago. So what is the reason that we are not seeing higher growths in the focus states, given that we are coming from a very, very low base in terms of market share versus our core states' market shares?
No, so year on year, if you look at the focus states are growing faster than that stuff. It is, little bit of change shifts you would see. I think it's more relevant that if we see a little longer data, in that stuff. So states like, if we get into states like UP, Karnataka, so they're doing very high. There are a couple of states which have not done as well, and that's what is resulting into this little muted growth. But in quarter two, you will see this coming back again.
Understood. And in the focus states, if I take all the focus states, six of them together, what would be the market share that we have in these six states at an aggregate level?
At an aggregate level, we would have about 1.8% market share. Less than 2%.
And would you have some kind of figure in mind that, let's say, 3 years down the line, this 1.8 has to become what market share or something like that?
So what we see, again, this is a weighted number which I'm talking about. With a very large market like UP, the very small market like Chhattisgarh or Karnataka as well. But what we believe that some will do much, much better, some may not do as much good. But we are looking at that we should be reasonably a mid-single digits kind of a market share is what we should reach. And within this, you will see certain states above that high single and some would be little below that. But that's the number. Right. So to sum it up, almost doubling this number in next 3 years' time.
Doubling the market share or doubling the turnover, sir?
We were talking about market share. So the
correct.
becomes a 4.5 kind of a number.
Correct. So if the market share is doubling, then the turnover will more than double because the underlying industry will also grow along with it, right? So which means that we should be looking at a 25 to 30% CAGR for that to be achieved.
Absolutely right.
Got it, sir. Secondly, just one clarification. There is this chart at the end which says sensitivity in key material categories. I'm not able to understand what that chart denotes. Can you explain, please?
Yeah, so Percy, basically that's quarter on quarter how our raw material prices or be process prices are moving. Like you still get, like in corrugated box, in last quarter was 0.98, so this quarter average is 1.04. So overall, at a price level, it's close to 7-8% price increase what we see in corrugated boxes. That's how we see it.
Okay. Well, I was a little confused because all your charts start from Q1 FY23, but the starting point is different. Like edible oil starts from 1.23, then another one starts at 1.13. So what are these? These are indexed numbers or what?
Yeah. So these are index numbers. Yeah. So we've taken one as a number prior to this quarter, like quarter 1 FY23 to prior quarter was 1. And the quarter 1 FY23 was 1.23 compared to quarter 4 of FY21-22.
Okay. So Q4 22 is equal to 1 in all cases.
Yes.
Understood, sir. Yeah, that's all from me. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Avnish Roy from Nuvama. Please go ahead.
Curtailed because of heat wave. In your categories, in the family packs, does it impact health? Because if customer is not going out of home.
Sorry to interrupt you, sir. Sir, we were not able to hear you. Can you please begin the question again?
No, I am speaking only. Yeah. So am I audible now?
Yes.
Okay.
Yeah.
So I think in the audio there is some problem. So now quickly, I wanted to ask, in Q1, a lot of the categories have been impacted because of heat wave. In your category, does it impact help the family packs? Because if customer is more at home, obviously he's going to consume more of the family packs. So would you have seen benefit because of this in the family packs, and that's reflected in the numbers also? So could this cool off impact in Q2? Because now customer is again going out of home.
No, so I think you rightly picked it up, and which is what I was trying to make in my the statement, that family pack did relatively better because the heat wave would not impact as much, on the larger packs. It impacts more on the go or the impulse category.
Sure. Now on the margins question, we also saw results of the other snacks company. So they said that in terms of pricing, they are looking at some price hikes in the coming months, and some have been taken also, and you have also taken. So if you could tell us in terms of the dry fruits impact, and on an overall basis, what is the inflation currently on YOY basis, and what kind of a price hike has been able to overcome that hike? So if you could discuss both your price hikes and the total inflation till now in terms of YOY.
Right. So, Avinash, so basically, in first quarter, we've done some price hikes compared to last quarter. We done close to 0.7-0.8% price hike on average level on the company. Also, we have started withdrawing some promo offer. We've withdrawn some trade schemes compared to what we given in last year when we have to buffer in pricing. So that's what we've done in last quarter. But overall, we see that this quarter also we see at least 1% price impact overall coming in, and that's what we are working on. That we are planning to take some price increase in next month, and also we are trying to improve on a trade scheme. That's what we are doing now.
And one follow-up on this. So when does your sales growth go ahead of the volume growth? Which quarter you expect that to happen?
Quarter 3 will be quarter where we'll see price growth will be higher than value will be higher than volume.
Sure. Now, final 2 quick questions. So marriage days in the coming quarters are going to be much higher. Q1 it was quite low. So if you could tell us in terms of your business of sweets, how does this have a beneficial impact? So that will be the first question. Second will be Bihar state has seen the highest allocation in terms of budget. Almost they are talking about 80,000 to 1 lakh crore kind of an outlay. Obviously, this means that Bihar GDP could see acceleration, and Bihar is a key market for you. Do you think that in Bihar your penetration and market shares are very high, so you may not be able to enjoy too much benefit of this? Are you enthused by this higher budget allocation to Bihar?
Right. So, question basically. So, one marriage season. So, see, we have already started a festivity season like Rakhi is in next month and Diwali is coming in. So, festivity started for us. So, because sweets is a key factor in this next 3 months, and of course, marriage is an addition this year. So, we are, and sweets is largely manual. We are working on as full capacity in these 3 months. So, we see uptick in demand in sweet category. What we've seen in July month. So we see a good growth in coming quarter also in sweet category. That's what we are working on. Gifting is also planned in a good manner in gifting category. So that's in sweet and gifting category. Plus, of course, Bihar is a big market for us where we are having close to 24-25% market share, which is a big market share for us. So of course, when the Bihar market will grow, investment will grow, and we are not at a very leadership position. Haldiram is also doing very good in that stage, and there's a big market, big opportunity for us to grow in that market. So we see a good uptake in our overall growth in Bihar itself, because in last 12 months we are also struggling in Bihar. We have done a lot of changes in Bihar. In last 3-4 months, a lot of changes is going on in next year, in coming quarters. So we see a good growth in Bihar itself in coming quarters.
Sure. If I can squeeze one last question. So the regulator is now gunning for much higher disclosure levels. So if on the front of the pack we have very prominent mention of fat content, salt content, sugar content, how worried would you be? Because obviously customer may be knowing at the back of the mind, but if it is so upfront, how does this impact consumption? And any timelines you expect, and what will be the final color of this? Any insights on this? Currently more of a draft, but what will be your take, given you are a key player impacted by this?
So, see, I don't see any major consumption issue in this because from compliance lens, in last 2-3 years, there has been a lot of update on the pack itself. You will see a back of pack, there will be how much grammage, what sugar content, everything is there on the pack. It will be just bigger and everything. So we don't see any major changes in overall consumption lens. That's what we see.
And when do you see it happening?
So from happening next, our team is working, our compliance team is working on the same. I think in next 6 months, 6 to 12 months, we'll be on the compliance team.
Okay, thanks. That's all from me. Thank you.
Thank you. The next question is from the line of Mehul Desai from JM Financial. Please go ahead.
Yeah, hi. Am I audible?
Yeah.
Yes, you are.
Yeah. Yeah, Bishop, just one few bookkeeping questions. One, can you let me know what will be the PLI benefit for the full year?
So PLI benefit for full year will be around close to
60 crore. 60 crore, right?
Yeah, and so for next 12 quarters, it will be on a quarter basis. So like last quarter was one of the time where we are taking for last 2 years, but yeah, from next quarters it will be quarter basis, normal phenomena for us.
Okay. So for FY25, 60 crores, and for 26 also the number remains same, or does it reduce?
To 47, 48. It will reduce going.
Okay. Okay. And can you help me with what has led to this increase in staff cost on a YOY basis for the quarter?
So in staff cost, so this quarter, of course, we done some increment for the company, and there are a lot of investment in people. Plus, there were some ESOP cost which has been done in this quarter. Plus, there was some expense which has been booked in last quarter in other expense which has been classified in this quarter in February. Overall, if you see, it's close to 11.5% increase compared to last quarter.
Okay, understood. And we expect this, this current run rate to sustain, right, in terms of quarterly run rate in staff costs? Or does this expense get reduced? Or, you see this 34-35 crore run rate continuing.
Right. Of course, but yeah, so you will see that this and next 2 quarters, there will be a lot of sweets category festivity. But overall, when we see a percentage level, so our target is to take this to around 5.5%, up to 5.5%.
5.5 to 5. Okay. And on the A&P spends, how do you see A&P spends for the full year? I assume this quarter the A&P spends were lower.
From Bikaji lens, first and fourth quarter, we normally see A&P spend as lower level, but yeah, second, third quarter we see a reasonably good spend. That's overall what we are doing, because this is a festivity season. So at the average level, we will be targeting 1.75% of overall ad spend. That's what we are taking.
Okay, got it. Thank you. Thanks, Rishabh.
Thank you. The next question is from the line of Yash from Stallion Asset. Please go ahead.
Hi, sir. Thank you for the opportunity. Just wanted to understand what would your distribution target outlets for FY25 and FY26?
In terms of direct reach, we would want to add 50,000 in each year. So we think that by end of next year, we should be at about 350,000 outlets directly covered. And the overall indirect reach is an outcome of that. So difficult to know exactly put a number, but yes, our aspiration is to take it to about 12.5 to 13 lakh outlets.
Okay. And so what would be your volume growth CAGR guidance for next 2-3 years?
So volume growth, what we are targeting, that we want to grow volume at between 13 to 15%. That's the target what we are taking on as a company. So that's between 13 to 15%.
Okay. And sir, last question. Do you think, as a strategy, you'll be able to maintain 32% gross profit margin, despite some sort of volatility in the commodity costs?
So that's the target what we taken, that we will maintain 32% gross margin level. That's I think because ultimately as the brand is growing, we are focusing more on branding, more on brand equity, working more on distribution. So ultimately that's what we are targeting. That we'll be maintaining 32% gross margin. Of course, we will not in the future that commodity price or oil price again go to 150, 170 level. We don't know. But yeah, at current level, we don't see any major changes in gross margin.
Okay, got it. Thank you.
Thank you. The next question is from the line of Gaurav Jogani from Axis Capital. Please go ahead.
Thank you for the opportunity and congratulations on the strong set of results. So my first question is with regards to the price hike that you have mentioned of 0.7 to 0.8% in Q1. So is it because of the reduction in the trade schemes, or is it you have taken an incremental price hike?
So we're taking incremental price hike.
And there is an additional trade scheme reduction as well, in addition to that, right? Okay. And sir, you have also mentioned that you are looking for a 2 to 3% kind of a value increase for the year, apart from the 15% kind of a volume growth. So this 2-3% is it on an annualized basis, or is it for the remaining 3 quarters that you see?
So it will be 2 to 3% will be for 7-8 months largely. So on a yearly level, we'll see 1.5%.
Okay, 1.5%. And also, in terms of the PLI that you mentioned, so there are 2 PLIs, right? One PLI is with regards to the CapEx that you have done, and there is also a PLI in regards to the exports, advertisement, branding activities that you undertake. So that will be the over and above this 216 odd crores of PLI that will be 260 odd crores of PLI that you will be receiving.
Yeah, Gaurav. So that's the 2 PLI what we have got from the government. One is of course 261 and other one is close to 23 crore rupees. So in that line, so what we committed that we'll invest close to 46 crore rupees in ad investment outside India. So government will reimburse 50% of the same. So that's the plan we have. In six years we'll invest 46 crore rupees in and government will subsidize 23 crore rupees year on year.
But this 23 crores, will it be booked in other operating income, or will it be booked in the netting off from the other the expense?
It will be netting off from ad expense because there is no point doing double entry in the double entry.
Okay.
So we
okay. Sure. Okay. Thank you. That's all from me.
Thank you. The next question is from the line of Priyank Chheda from Vallum Capital. Please go ahead.
Hi, sir. Sir, exports, we were planning to grow at 20-25%, while it has remained muted. The factory which we were planning to come up, has that been operational? And if that's so, what would be the export target for this whole year?
So that factory is partially operational, right? What happens is that when we do this frozen food, it has lots of assortment. Now, container goes when you put in all those products and then the container goes. This factory trials have started, so few of those stuff we have started doing. The balance still is being sourced from outside. I think by end of this quarter, this will all get stabilized, and the growth numbers what we spoke about, by end of the year you will see those kind of numbers coming in. So it's well on track. Also, there is the lag between what orders come and what gets executed because there's a huge transit time. So the kind of orders what we see in the exports, the kind of the excitement and the confidence what we see, I think we should be well on track on our exports plan.
In case, sir, there would be some targeted PLI for FY25 also, which is the 23 crores marketing PLI for exports. Does that have any impact in case if we are delay in our sales growth with respect to the export PLI?
No, so this 23 crore rupees we'll get in 6 years, divided in 6 years. Like this year, if we'll do 8-9 crore of ad investment outside country, and government will reimburse 4.5 crore rupees. That's the overall yearly number. If I say, so overall we see because ultimately we need to grow market. We are depositing good team in export market. So we are targeting 20-25% growth in export. That's what we are targeting as Bikaji.
Oh, got it. So even if basically it's not sales linked, it's related to the investment that you would be doing in terms of marketing the product internationally, right?
It's both. So we are also recruiting team because ultimately only one thing we cannot push the numbers. We are working on distribution. We are working on team as well as one will help in filling the growth.
Okay, and then we were supposed to hire a national distributor in US and Middle East. Is that working fine, or is there any other updates that you would like to share?
Sorry, I didn't understood. Can you repeat the question?
So there was one national distributor which you were planning to appoint in US and Middle East, right? That was what you had shared last quarter. So any update on that? Is that been appointed? Is that the sales getting booked from there?
No, I think perhaps maybe the articulation issue and all, because you cannot have one person or one exporter. We export to over 25 countries. It is in the countries of in US we do have one large person, one exporter, so importer. But besides that, also we have in say West Coast, East Coast, the North America, and all the other distributors as well.
Okay. And any plans to share on the QSR vertical?
So from QSR lens, we're doing a lot of trials on that lens. We're targeting this year that we'll open for next 18 months. It will be slow start. We'll set up process and everything. In post 18 months, we'll build on business plan and everything. For next 18 months, it will be just setting up process, IT systems, setting up outlet type, category, product, everything. So next 18 months will be slow on QSR.
So what would be the number of stores that we would add in next 18 months? Today we have 2-3 stores, right?
Around close to 5-6.
Okay, we will open 5 stores in next 1.5 years. Okay. And sir, any breakup you would like to share on the direct reach within focus and core for this quarter?
On reach?
Yes, on the direct reach of 272. What would be the breakup of focus and core?
Yeah, so it's about 100,000 outlets plus. So to be precise, 1.07 lakh outlets would be in the focus states. In the core states. 1.35 lakhs in the focus states and the rest in other states. That's the breakup.
Perfect. And so would the indirect reach also move with the increasing direct reach, or it would move more than the direct reach?
See, hypothetically, what happens is that over a period of time, your product starts moving through wholesale. But when you get into focus states, you will see that initially it is directly proportional kind of a stuff. But as the brand starts getting momentum, this number becomes the factor starts increasing, the multiple factor.
Okay. And just to clarify, the PLI benefit that you mentioned for full year is 60 crores, right? Versus the previous quarter update was 45. So any revision in this because of the higher sales which we are thinking of?
So previous quarter 45 was for full year, not for one quarter.
Yeah, full year, which you are guiding this year would be 60 crores.
Right. So it's a formula of the government that how they will give on top line basis.
Okay, perfectly. And then the other operating income which you are booking 17 crores is completely PLI, or is there something else also in this?
So PLI is close to 15 crore rupees. Other subsidies. Overall, the company is getting a lot of subsidies from the government.
Okay. So but the major portion is here. Okay, 15 crores. Perfect. And just a last question. I couldn't understand your initial answer on the focus market growth this quarter, which is flat, almost flat at 74 crores. I couldn't understand. Is there a seasonality in this particular product to be seen in this? Can you again explain? It would be great.
No, so so there's huge seasonality. You will see in that stuff.
Okay, so but then the seasonality is
And see, it's not flat in terms of growth. If you look at year on year, it's a 16% growth. When you talk about swing, then this is a lean quarter, and now this quarter 2 and quarter 3 will be the highest quarter you will see.
Okay. All right. Thank you.
And that's true, gentlemen. If you look at even in not only in focus, you look at core, you look at others, the swing on quarter 1 over quarter 4 is always low. You will see a huge swing between quarter 1 and quarter 2. Then quarter 2 and quarter 3 will almost be the same. Then you will see a negative swing in quarter 4 in that. So that's the progression in this business we have.
Actually, sir, what has happened is the base quarter, which is June 23, there is some readjustment that we have done from focus to others. is why there is a mismatch in the numbers which you are seeing. I mean, I'm not sure if we can take it offline. There's some readjustment with respect to the previous year quarter which we have done on the focus area.
Yeah, so that's very minuscule, and the thing is, we also spoken earlier on that stuff. Chhattisgarh is one state wherein we got our factory commissioned in March this year, so which is 3 months just before, and that's where we're getting it into. We got the state as a focus state and replaced it with Telangana. That's the only shift. We said we will only have 6 as focus states, and that's the replacement. Perhaps that's the adjustment if the numbers you are referring to.
Okay. All right. Thank you, sir.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Sumanyu Saraf from JM Financial. Please go ahead.
Hi, thank you for the opportunity. So my question is regarding RM prices and gross margins. So I understand from the remarks that there has been an uptick in raw material prices, which I can also see from falling gross margins year on year. However, if I see slide 17 of your PPT on sensitivity in key RM categories, prices of all categories have actually fallen year on year. So what am I missing here?
So slide 17, you see in last quarter, like edible oil also increasing compared to over last quarter. Purchase is largely same in first quarter, but overall we see good increase in inflation in purchase price also in this quarter. So overall, this is just a trend of overall at the average level because there's a lot of purchase. So we are a multi-category brand. We're not dependent on a single brand that, like if we are only a chips company this year, potato price has been in a very inflationary pressure. Like potato price currently is at 27-28 level, which last year was 15-16 level. So we did not for potato price overall this is having 6-7% overall business share in the overall business. So we are not dependent on any single brand, single category. We are using multiple pulses, lot of like milk, sugar, lot of raw material we are using. So any significant impact on single raw material doesn't impact much on our gross margin. But overall, yeah, we are seeing some inflation in potato, dry fruits like kaju, or few pulses like chana and more chana prices. So that's what we are. Yeah.
Okay. No, so I understand sequentially prices have gone up. But if you see year on year, so basically, should do you mean that there are some other key raw material apart from the 4 disclosed in the PPT? Because year on year, all these 4 have fallen. Like if I see laminates have gone down from 0.9 to 0.84.
Right? Like edible oil, what we see that it's at 150 level has came down to around 100 level, right? So on year but we also pass on the prices. We see last year volume growth was 18% versus value growth was 14%. 14% we have passed on the prices. We given promo offer, a lot of trade schemes what we given. So that's how you will see that the prices also fallen and our sales value also gone down compared to volume. So that's what is going parallel.
Okay.
So
thank you.
just to add to it, so one is year on year. The other thing is its idea was to just show you the swing and trends that it's moving up. So when we look at what we did in last quarter or the yesterday quarters and where it is, so it's just indicative. Idea was to give that flavor and sense how it's moving.
Right. So overall, should I understand raw material prices have risen year on year, or they have been benign?
So overall, compared to last 2 quarters, it has started increasing in last 2 quarters.
Yeah, but on year-on-year basis?
On year-on-year basis, largely same.
Okay. All right. Thank you.
Thank you. The next question is from the line of Kuber Chauhan from Anand Rathi. Please go ahead.
Thank you for the opportunity and congratulations for the good set of numbers. I just wanted to know that what kind of price hike variation is there between our core market and focus market, and what kind of price hike we have taken in terms of categories.
So from price hike lens, what I told earlier also that we're taking on an average close to 0.7-0.8% price rise in first quarter, end of first quarter largely, May I think. So that's what the price hike we've taken. And also we have withdrawn some consumer offer and promo offer and many other things. So overall also in coming quarters, what we see that we'll take 1.5% price rise in coming quarters.
So across category we have taken, or is it, I mean, if you can just specify the categories, is it Western, is it Bhujia Namkeen?
Salty snack category.
Okay, and is there any kind of a variation between core and focus market in terms of prices, what we sell?
Pricing is largely same,
Okay. Thank you and all the best.
Thank you.
Thank you very much. The next question is from the line of Prashant Kothari from Pictet AMC. Please go ahead.
Hello, sir. Yeah, a couple of questions. The first is on this pricing versus raw materials. It is a bit confusing because year on year we see that the volume growth is higher than the sales growth. So there seems to be some pricing cut on an overall basis versus about 3% price increase that we are kind of adding towards. Can you explain that, please? And second question was on the quick commerce side, how important it is for us on an overall basis, and also maybe if you were to kind of drill down into kind of big metros, it's like Delhi and stuff, how important it could have become. Thank you.
So I think this channel is picking up the pace and is extremely important from two lenses. One is in terms of, it helps you reach anywhere and everywhere and anytime. That's one. And second is that this is where, this also helps you, to be on top of mind. So that's what it also do that stuff besides volume. Today, if we look at the contribution of this Q1 channel is not as much because if we see the universe of outlets selling this stationery product is 8.5 million, even more outlets. So Q1 cannot make it for all, but still last minute need, convenience is what are the factors which is really picking it up. So we speak about this channel for us has grown at over 200%, but then the bases are small. We see this channel getting stronger, and that's where our synergies, our JBPs with these channel partners is strengthened over years, and we will continue to invest behind this channel.
Thanks for the question about pricing.
Yeah, so from pricing then, so can you repeat the question, please?
Yeah, the question is that we aim for 3% price growth, but what we're seeing actually is volume growth being higher than the sales growth, because pricing is actually declining year over year. Can you just explain that, was there some one-off or something else?
Yeah. So largely from pricing lens, you see that last 1.5 years back, we've seen a good inflation in each raw material, and then it started falling, like commodity prices started falling, pulses prices started falling. So overall, we have seen a good fall in all the commodity, be it edible oil or other pulses. So we also reduced the prices. So last year, you will see that our volume growth was in salty snacks was much higher than a value growth. We again promo offer, reduced prices, both things we have done. So last year, volume growth was close to 17-18% in salty snacks category versus value growth was close to 13.5%. There was a gap. Like this year, we will see the gap has been reduced. We have done some increase in prices and also started removing some consumer offer and everything. So this year, we'll see a gap has reduced compared to last year. And in coming quarter also, we'll see that largely until last quarter, we'll see increase in prices of increase in value growth versus volume growth. That's what we see. And in end of second quarter, largely into next, we will also take some price increase depending on what commodity prices has been going on.
All right. Thank you.
Mr. Prashant, is your question over?
Yeah, thank you very much.
Okay. Thank you very much. The next question is from the line of Abhishek Kumar from Samtum Wealth. Please go ahead.
Hi, good afternoon, and congratulations on a good volume growth number. So I had two questions. My first question is pertains to strategy. So when you guys focus on any particular new state or be it a focus state, so how you guys go about it with respect to your product? So is it all the products at the same time, or is it on the taste and preferences of that particular region that you decide on, maybe first sampling or first going with a particular product and slowly gradually pushing your other products? So this is my first question.
Yeah. So as we get into the states, we look at that what is the saliency of what product sells more and against whom are we wanting to play. So that's the first stuff. So while we have a large bouquet of products, huge number of SKUs, but we go with limited set. And then we see what works. So we start putting, pressure or investment behind that. And certain products, when we see that the movement are very slow, we try to cut the tail. That's what is the strategy we work. And even otherwise, if you look at, we have been there in these states for quite a while. And the salience of products is not the same. So let's say in Rajasthan, if my bhujia contributes to about 30%, in southern states, it contributes to about 10-12% kind of stuff. So product mix keeps changing. We do not deprive or just say we will not sell. That's not the strategy. But yes, what must sell is definitely we push for.
And in continuation with this, so new innovations on, say, SKUs or a particular product, say, in ethnic or Western style. So new innovations are firstly through the core markets, or again over there also we just go with all the markets at the same time? Or first you try it in your core base and subsequently build up?
Sure. So few are at a national level and few are at a regional and geography specific. So for example, last year we launched Paneer Bhujia, right? And this was for pan-India, so we started off from core but did extremely well, moved on to focus into other states as well. There is, the products like, say, Mangalorean mixture, Southern mixture. So those are more South specific. However, on quick form, if we look at, so maybe the South Indian diaspora staying in, say, North or Delhi part, so it does there also. But then, yes, focus of these kind of entities was more on South, but still sell, but in a very limited quantity. That's how it works. So it's a mix of both. Certain, say jalmuri kind of a stuff, which works very well in the eastern states. But we do sell it in northern states as well. Salience is low.
Okay, got it. Understood. And my last question was with respect to competition. So as you mentioned earlier to one of the participants that you would want to increase your market share in focus markets from, say, currently less than 2% to over 4% in coming 2-3 years. So how exactly is the competition in those markets currently you see and such later also? And when I say competition from other pan-India players, big players, both in ethnic and Western style, and along with local regional players. So if you could throw some light on that.
Yeah. So for us, Western is a very, very small category. For us, traditional is large, and that's where we focus more on. In terms of competition, we do have intense competition. The market is like a battlefield. All brands wants to gain space in the store, market shares, distribution, and so does we want. So it's about doing right things in the right place at the right time. That's what is the mantra we play on. And for that, the back-end support, the kind of marketing investment, synergies between marketing and sales, what we try to bring in, has helped us thus far, and we would continue to invest behind these kind of investment. So two-pronged again. One is to create demand, that's marketing, and to push, that is sales, so which is sales and distribution SMB. These are the stuff what we are working around. to top it up is with the right innovation, right products, quality and all. So which is what giving consumer a good experience, which helps us getting him back for our consumption. So that's the philosophy or the mantra we are trying to work on.
Okay, got it. Thanks for that and all the best.
Thank you very much. The next question is from Manan Vandur from Wallfort PMS. Please go ahead.
Thank you so much for the opportunity and congratulations on the numbers. I was reading a report from September 22 and I was just looking at the market share. So in Western, we had 0.8%. In Ethnic, we had 9%. In Sweets, we had 6%. And Papad, we had 5.7%. So could you please help us out into knowing for FY24, how have we gained or have we lost, or how? Can you please elaborate on these four aspects?
Yeah, so gentlemen, that was the time wherein we were going in for IPO and we had taken this one-time data from one of the research agencies, right? So maybe we can separately get back on that stuff. We have asked for some data to come in. Looking at the kind of growth year on year, what we are doing, and if you read and if you would have heard that overall category hasn't grown, in the pace what Bikaji has done. So which leaves us with a number which that year on year we have gained share. That's where it is. Western snacks, yes, let's say even in Q1, even if you look at last year, we have grown by 25%. So but it's a very small share, so therefore I don't know at a national level what movement it would have done, but maybe we can get back to you on this stuff more in details.
Okay, sure. That's it from my side. Thank you.
Thank you. The next question is from the line of Nishant Joshi, who is an individual investor. Please go ahead.
Hello, sir. Nishant here. I have a small query. As the ethnic snacks contribute the largest in the top line, around 75%, and the capacity the company has production around ethnic snacks contribute around 55%. So can I know what is the capacity utilization for this particular segment, production capacity utilization?
So ethnic snacks, we have built a big capacity in namkeens, which summarize in ethnic snacks category. So in namkeens we have big capacity. Of course, in Western snacks, the capacity utilization is low because we are building this category. And in ethnic snacks, compared to Western snacks, the capacity utilization is high. So overall, I don't have exact number as of now, but yeah, overall, Western snacks capacity is low compared to ethnic snacks. That's what I can say.
Okay, so means capacity is enough to take care of next 3-4 years of sales.
For next 3 years, we are very much comfortable that we don't want to do any major investment in any category, be it ethnic snacks or Western snacks.
Okay, thank you.
Sweet investment.
Mr. Nishant, is your question over?
Yes, thank you.
Okay, sure. Thank you very much. This was the last question for today. I would now like to hand the conference over to the management for closing comments.
Yeah. So once again, thank you very much for joining this call. Hope we could answer your questions. However, if any of the questions you feel you couldn't ask in the paucity of time, or you feel that was not answered well, we'll be glad to take them up separately, and you can reach out to our communication manager, Prateek. He'll help you connect with the right person, and we'll be happy to answer any more questions. With this, thanks once again.
Thank you. Thank you for joining us, and you may now disconnect your lines.